Welcome back to the Dividend Diplomats YouTube channel, guys. You've got the Vanguard dividend investors over here joking, but you got Bert and Lanny, your boys, the DD guys. We just talked about Bert's three stocks he's watching. I wanted to not talk about three stocks I'm watching, but three stocks that are in the same industry that has actually they've been all under the radar. Nobody's talked about this industry, I feel like. No, we're not talking about health. No, we're not talking about health insurance, pharmaceuticals, banking or telecommunications with AT&T or Verizon or Disney, guys. We are talking all about general insurance on today's video.
Most exciting sector of them all. But
Looks it.
everybody, before we talk through it, subscribe to our channel. Give this video a thumbs up. And remember, help us get to 20,000 subscribers. That's what it's all about. We're trying to grow this channel and help not just ourselves, but everyone else get to financial freedom. So let's talk about these insurance companies. Because I joke that they're not exciting, but that's the best part of some of these. These are boring companies, but have produced some great results for investors over the years. And there's some great dividend growth stocks in there. So that's going to be exciting to feature all of these and start and talking and see how the metrics look for each one.
Very interesting here. And, guys, and Bert, you own two out of the three.
That's correct. I own two. And what about you?
You own two out of the three, but I think there's one that you don't own and one that I don't own.
Yeah, we got full coverage over the three on this. So we got full coverage, everybody. So
So we'll dive in. S&P 500 is what, Bert? Up over 17% this year.
yeah, it's at 80,000. No, I'm kidding. It's at over 4,500 once again. So the S&P 500 is not cooling. Of course, that's propped up a little bit by the tech sector. The tech stocks have come roaring back in there, and with that, so has the S&P 500. But it is back above the big 4,500 mark. It is what before it came down, the highs were at 47.66 last at the end of 2021 before the stock market came down. So it is close to eclipsing the 2021 highs. Jeez. That's all I
Everybody's
can
like
say.
all-time highs, all-time highs. No, I'm kidding. Actually, I don't know how many times on my phone this past last week, where it was like, oh, so and so has hit 52-week high. So and so has hit 52-week high. So guys expect probably more of that for now, but we'll have to see. Things still don't really make much sense for me,
Nope.
but that's why we evaluate stock. It's why we always buy because we can't time the market. And here are three stocks, Bert. To get into it here, we're going to talk about Travelers Insurance, Cincinnati Financial, and Bert's favorite duck, Aflac. Uh,
Aflac.
he's
Aflac.
back, baby. So,
Woo-wee.
yeah, oh, man. We've got not just two dividend aristocrats. One of those aristocrats is actually also a dividend king. The metrics actually are very, I'll use the word interesting because two kind of resemble each other, but then there's one that kind of just, looks shows value, but then it doesn't show value. It's kind of interesting here that we'll have to peel back the layers.
It's like the three Manning brothers. Eli and Peyton are kind of similar, and then there's the third Manning that just looks different than the others. He didn't take it to the NFL, but all right. So let's go through it. We're going to run them through our stock screener, which has three metrics and a bonus metric: PE ratio less than the S&P 500, payout ratio less than 60%. History of increasing dividends. I don't know why I stumbled on that one. I should know that by now. I have them tattooed on my arm, guys. I see it every day. I should know. So the third metric is increasing dividends. And then the fourth bonus metric is that dividend yield. So let's do this, Landy. Let's talk about insurance and run these companies through the screener.
Travelers, guys, we're going to start with Travelers. It's in my wife's account, so she has it in there. Ticker symbol is TRV, and they trade at a whopping $165.95. Analysts are expecting, again, you got to love the insurance business because overhead cost is, fairly limited and a lot is dependent upon obviously the premiums they earned plus investment, gains as the trading investment portfolios are looking a lot better this year. But EPS projections are $14.30, Bert. So that's a PE ratio, guys, right now below 12 at 11.6 right now. But again, it's less than the S&P 500. And fortunately, we're going to compare it to the other two as we go through them. But, as of right now, TRV is below 12.
Yeah, that's an interesting point, especially if the EPS are going to continue to get propped up by these better investment returns that you're going to see in 2023. We don't know if it's fully built in yet, but see how it performs. Let's look at the payout ratio. Their annual dividend's $4. gives you a payout ratio of 27.97%. So a very, very low payout ratio. If there's another bad year, EPS comes down, plenty of room to maintain and continue growing that divvy.
Plenty of room, guys, plenty of room. And, in fact, as we get into the dividend growth, their last increase was just a few months ago. They went from 93 cents to $1. So, if you do the quick math, that was a nice 7.5% dividend increase that Travelers did, which is above their 5-year average of 5.29%. They've been doing it for 17 plus years, brother.
Yeah, almost an aristocrat. They're very close, and odds are they're probably going to get it. Let's look at that yield. Their yield is 2.41%. How does that compare to their 5-year average yield? Their average 5-year average was 2.33%. So they're pretty much in line. I'd say it's like slightly above it, but it's in line with their historical mark. So it's interesting for Travelers.
Yeah, down 11% this year, but up 6% since last year. So, down this year, showing yield higher. That's, with the growth plus that down year, that's why the yield's slightly above where it was at, over the 5-year average. So there it is, Travelers, guys. That's the metrics there, below 12, below 30% payout ratio. Last increase was over 7%. Been doing it for 17 years, 2.4% yield. But Bert, you've got to put this one in the second slot because this is the one that you own, Jack.
Yeah, Cincinnati Financial, ticker symbol CINF. Yeah, we scooped them up at the onset of the pandemic because nobody knew how businesses were going to be impacted by insurance. So stock price just came tumbling down for Cincinnati Financial. So we scooped them up. And this is the one that is a dividend king. Cincinnati Financial is the dividend king on the list. So we were pumped up to grab them, obviously, because who doesn't want to own dividend kings? You know what? Make sure you like this video if you own dividend kings too. That's what it's all about here, owning those great dividend growth stocks. So let's see how their metrics stack up against Travelers, who is, as we showed, was showing signs of undervaluation. CINF is almost at 100. They closed at 97.89. EPS 456. P ratio 21.47. What?
So, yeah, what? So, guys, I mean, right then and there, much higher than your boys over at Travelers. So 21.47, pretty high for the insurance company. And, I do want to just, if you guys give me a quick second here too, I'm going to do a quick spot check on that. I'm pretty sure it's accurate. Again, we use a lot of Yahoo Finance analyst estimates. And yeah, $4.56 is the estimate. So guys, 21 PE ratio. Wow.
Yeah, they're never the cheapest stock. That's the one thing about Cincinnati Financial that I've learned over the years. That payout ratio, their dividend's $3 per share. This payout ratio is 65.79%. So they do pay out a pretty high portion of their dividend. It'll be interesting to see what their yield is compared to Travelers too with that. So let's put a pin in that and come back to it after we talk about the history of increasing their dividends.
62 years of growing dividends for over 7% on average. Gotta love it. Can't knock it. You gotta love CINF on the growth standpoint. And Bert, like you said, we put a pin on it on the yield front. Pay a higher percentage of their earnings at 66%. That dividend yield is over 3% at 3.06%. So well above Travelers, 65 basis points higher to be exact, Jack.
Yeah, and they're down 5.88% year to date, down 12.89% over the last 52 weeks. So again, let's summarize here. PE 21.5, 65% payout ratio, 7% 5-year growth rate. They've increased that dividend for 62 years with a yield of 3.06%. But I think it's time to move to the duck, Laney. Let's talk about Aflac.
You want to move to the Quackmeister, not Quagmire, but let's go to Aflac. Ticker symbol is AFL. I've owned this company for probably 10 plus years now. A dividend aristocrat. Doesn't need no introduction here. We all know the duck here, guys. Even though I know, there's been other insurance providers that have taken the cake on the marketing front. You don't really see too many Aflac videos lately. At least I don't.
But they've done that ad spend. They're trying to save money.
I think you're right.
Yeah,
I think you're right.
Nothing personal against the duck, but they're like, you're not the cheapest. You're a high value player. You're like that max contract NBA player, Aflac Duck. So we got to put you on ice for a little bit. Anyway, Let's go to the metrics here.
Yeah, they're trading at $69.58, and analysts are expecting a whopping $5.79. Now, Aflac typically has a lower PE ratio, and this one's at 12, so pretty similar to Travelers. And again, Cincinnati seems like the oddball that's not really in line, with the industry. But again, different products, different customer base from the insurance standpoint. But a PE of 12. Now, Bert, is the payout ratio similar to Travelers?
Yes, it is. Their payout ratio with the $1.68 dividend is 29%, so very low payout ratio. Now let's talk about the growth here. Their 5-year dividend growth rate's 11.42%. And as you said, they're an aristocrat. They've increased for 40 years. So they are a high dividend growth insurance company.
In fact, over the last few years, I know we were benefiting sometimes from not one, but two dividend increases occasionally throughout the year. As I go back through just looking at the history, yeah, sometimes they've been juicing it up like that. Obviously, we'll have to see what they end up doing, here in, 2023 when they announce it for the 2024 dividend. We'll have to wait and find out there. But yeah, 40 plus years of doing it, almost dividend king, well on their way. Now, Bert, what's that dividend yield look like, and what's that stock price done so far?
All right, their yield is 2.41%, which is below their 5-year average of 2.47%, but it's pretty much in line like Travelers. It's the same thing in the other direction, very close to their historical mark. Year to date, they're down 2.79%. 52 weeks, they are up 28%. So tough 2023, but great second half to the end of 2022 for Aflac.
Wow. So that's probably partly why their yield, is below the 5-year
Yeah.
average because of the big surge that they've actually had.
Yeah. So let's summarize here. PE ratio 12, payout ratio 29%, 5-year growth rate's 11.4%. They've increased for 40 years with a yield of 2.41%. The third on the insurance rundown here. Lanny, what are you thinking between Travelers, Cincinnati Financial, and Aflac?
I'd like to buy something in this industry from like not health insurance, because everybody knows I've been buying Elevance Health, ticker symbol ELV. I am not a buyer at these current levels or price points. Travelers, you know, though it has a low PE ratio, it's among peers if you take out Cincinnati Financial. So there's, it's not really moving or shaking me there. Payout ratio is great. You're going to get great growth. I actually like Travelers right now over Aflac simply because of I think the dividend growth future probably looks a little bit better right now for some reason. But again, I'm just not a buyer at any of these right now. Not looking to add either a new position from Cincinnati Financial, but I'm holding and dividend reinvesting everything that comes out of each of the ones I own, which is Travelers and Aflac in my account.
I wish I had more to say, but all I can say is I agree. I'm in the same boat here. There are other sectors that I'm looking at right now, the stocks on my watch list. Nothing from here is making me say I have to swap out one of those three to drop in Travelers or Aflac. But if you're looking for an insurance company, this is a great rundown. This is a great place to start because you're looking at three of the best within the insurance sector. If you're itching to get into one of these positions, Travelers and Aflac might be the entry ones for you right now.
So guys, let me know, let Bert know, let the DD know in the comments below. Have you been buying insurance stocks outside of health insurance? What other stocks are you buying right now? Which is your favorite of the trifecta insurance companies? Are you buying stocks to get to financial freedom by building that passive income stream? Let us know. Subscribe to the channel, like the video, and you're either with us or you're against us, Jack. That was Bert and Lanny from the DD, over and out.